All right, let's talk about something that I think drives every investor a little bit crazy: the noise. All the constant chatter, the conflicting advice, it's a lot. But what if you could cut through all of that? What if you could put your investing on autopilot? Well, that's exactly what we're diving into today. I mean, it's a great question, isn't it? It feels like it shouldn't be this complicated. You work hard, you save your money, you just want it to grow for the future. But the second you decide to get started, you're hit with this wall of information, a million different opinions, and just endless choices. And this slide just nails it. Investing today can feel so overwhelming because there are just too many stories being told at once. One day, the narrative is all about tech stocks. The next, it's about pivoting to commodities. And all that noise just leads to what it says right there: decision confusion. You end up feeling stuck, not knowing what to do next. And that confusion just morphs into this constant stream of questions bouncing around in your head. When should I buy? Is now the time to sell? How do I make this tax efficient? Am I in the right sectors? Am I too exposed to stocks? It honestly feels like a full-time job just trying to keep up with the questions, let alone find the right answers. All this uncertainty, it pushes us to do things, often the wrong things. We get antsy, and that leads to what this slide calls overactivity. We end up chasing whatever did great last year, which usually means buying high, or we panic and sell low. Or we're just constantly shuffling funds around, triggering a tax bill every single time. It becomes this really expensive, stressful cycle, and it's all fueled by that initial confusion. Okay, so if that's the problem, there has to be a better way to do this, right? The key is shifting our mindset, moving away from all those gut feelings and emotional reactions, and moving towards a system that's actually built on data and evidence. Just imagine that for a second. What if you had a system that wasn't getting swept up in all the hype or fear? A process that just looks at the cold, hard numbers, things like market valuations, risk indicators, historical data, to give you a consistent, clear-headed view of where we really stand. Well, that system actually has a name. It's called DSPnet. The best way to think of it is as an intelligence engine. Its entire purpose is to do the one thing that we, as human investors, find so hard to do: to end the confusion and stop all that costly overactivity by giving us a clear, data-driven path. So, how does this engine think? Well, it all comes down to these three core principles. First, it assesses where we are right now. It's not about predicting the future, it's about understanding the present. Second, it learns from history, but doesn't assume history will repeat itself exactly. And third, and this is the big one, every single decision has to be unbiased and driven by data. Emotion is taken completely out of the picture. Now look, having a smart engine is great, but the real trick is putting those smarts into action, right? And doing it consistently. So here's the crucial question. What if you could take that entire intelligence engine and basically plug it directly into a fund that executes the strategy for you automatically? And that brings us to the DSP Multi-Asset Omni Fund. This is the vehicle. This is what takes all those data-driven signals from Netra and turns them into an actual working portfolio for you. Now, I know that name is a bit of a mouthful, so let's break it down. The first part is fund of funds. It sounds a little weird, but the concept is super simple. Instead of the fund manager buying individual stocks, this fund invests in a collection of other mutual funds and ETFs. It's a fund made up of other funds. I absolutely love this analogy. It makes it so easy to understand. Think of it like a big music festival. You don't have to go out and scout 1,000 different bands yourself. Nope, you trust the festival organizer, the fund manager, to do all the hard work of finding the best talent and putting together an amazing lineup for you. Okay, the next part of the name is multi-asset. This is all about diversification, not putting all your eggs in one basket. It's like building a well-balanced meal for your portfolio. You wouldn't just eat protein, right? You need carbs and veggies too. In the same way, this fund doesn't just own stocks, it balances things out with debt for stability, and even commodities like gold and silver. And this chart here shows you what that balanced meal looks like. You can see all the different pieces. You've got equity for growth, you've got debt that acts as a cushion, and then you have commodities as a potential hedge against other things. The whole goal is to build a portfolio that's resilient no matter what the market is doing. So we know the ingredients, but the real secret is in the recipe, right? It's about how the fund decides on the right mix at the right time. And that brings us to its dynamic strategy. This is where the fund manager really puts the strategy to work. They can choose from a huge universe of different funds to build the portfolio. And this is a really key point. They are not restricted to just using DSP's own funds. They have the flexibility to look across the entire market and pick the absolute best funds from other companies to get the job done. And this is where that word dynamic really comes to life. Just look at these flexible ranges. The allocation to equity can swing from as low as 25% all the way up to 75%. This is not a static, set it and forget it portfolio. It is designed to adapt. It can increase its exposure when the data from Netra sees opportunities, and it can pull back when it signals rising risks. Now, if you're familiar with DSP, you might be thinking, wait, don't they already have another multi-asset fund? And you're right, they do. But here's the key difference. That other fund buys stocks and bonds directly. This Omni fund, on the other hand, uses that fund-of-funds structure, which gives it a huge amount of flexibility to shift between different expert strategies and managers. And remember that problem we talked about at the very beginning, paying taxes every time you make a switch? Well, this structure offers a fantastic solution. Because all the buying and selling happens inside the fund itself, it doesn't create a taxable event for you, the investor. The fund handles all the adjustments tax efficiently behind the scenes. That's a huge deal. So we've covered the what, the why, and the how. But really, the most important question is still on the table. Does this kind of approach actually make sense for your own investment goals? Let's run through a quick checklist. So who is this for? Well, it's probably a good fit if you want that true all-in-one diversification in a single investment. It's also for people who would rather rely on a disciplined, rules-based system than trying to make emotional calls. And, it's fundamentally designed for investors with a long-term mindset who believe that managing risk is just as important as chasing returns. And of course, for full transparency, here are some of the key details. You can see the benchmark it tracks against, which gives you a sense of its neutral position. And it's really important to understand the expense ratio. As a fund of funds, you're paying the management fee for this fund, which in turn covers the fees of all the underlying funds that it holds inside. So at the end of the day, it all comes down to a simple trade. Swapping that chaotic, stressful, and often expensive world of do-it-yourself investing for a single automated portfolio that runs on a clear, data-driven system. And that really just leaves one last question for you to think about. Are you ready to trade all that market confusion for some real portfolio clarity?